5:07. Got it.
All right, we're live, Howard.
Welcome, everybody. Say hi, JC.
Hi, JC.
This is Charts and Old Farts. You know, it's been a while since I did a little video. Wanted to get with my friend JC. It took us 4 hours to figure out Google Hangouts with no tech support. So big opportunity still, JC, in peer-to-peer broadcast sharing.
Yeah.
Right. So Charts and Farts.
You say so, Howard. I mean, we have this conversation all the time, and you know, you think audio is the way to go. I'm hearing a lot of things about audio. No, you're saying otherwise?
No, I just wish Hangouts work better. So
it does work fine. It's us that's the problem.
Charts and Old Farts. You are Charts, and I am Old Farts. So we have 15 minutes to go around the world. I want to focus on, as I always do with you, optimistically, what's working. So you're going to pull up technology versus the S&P, right?
Yeah, you know, you wanted to start with technology. Every time you and we have these conversations, you are always asking me about things like Google and Apple, and you know, you're interested. You're a technology guy, right? This whole Google Hangout thing is probably not a good example. But so here we're looking at a chart. You're asking me what's working, right? We're looking at a chart of technology relative to the S&P 500, just literally ripping higher. So this is tech on a relative basis compared to the rest of the market. And this is just a monster. You know, right now it represents 22% of the S&P 500. I don't have the exact data off the top of my head of what it was back in 2000, but it was definitely higher. And why can't we continue, Howard? I mean, here's the longer term look. Here's the
that's the important chart right there. Interrupt. So that's the important chart there to me, right? So Mary Meeker's out today with 300 slide deck on state of the internet. We know the state of the internet by looking at this saucer. You know, you have context back to the bubble. You can see how out of hand technology got in 99, 2000 as a percentage of the S&P. And now we have this long, what everybody keeps mentioning the word bubble in tech, and you can just see this long, beautiful, can you see me, JC?
I see you loud and clear.
Okay. You see this long, beautiful base of technology versus the S&P. And we'll end the show with financials to show why it's even more relevant. But, you know, because this doesn't account for Amazon, correct?
It does not account for Amazon at all. Amazon's not part of the technology sector. It's in the consumer discretionary space, which also made new highs today. Today's Wednesday. This is strictly technology. If you want to look at Amazon, technology. This is yep.
So that's without Amazon, which you can flip to now, buddy.
So this is Amazon, right? So here we're looking at the digestion of gains in early 2016. It bottomed in February with the rest of the market. Broke out in the summer, right? You can see that up here. And, you know, we hit new highs in the fall of last year and broke out once again this spring. And my target has been 1050. It continues to be. That's a key Fibonacci extension off that 2015, 2016 correction.
Okay, now you're getting geeky, but for the bigger audience, you can just see how technology may not even be being measured right, and how much opportunity there still is if you compare 99 from the last chart to where we're at today relative to the S&P. You can really see that there's still a lot of room to grow.
So
that may not.
Howard, let me ask you this. So the pushback on this, and I'm not saying I agree with it, but the pushback on this chart being so bullish is that this part here, right? This part on the left, this massive uptrend that came crashing down. This is like a mirage. So you almost want to kind of like hide it like that. And this is more of an oscillator that is extremely overbought, right? And that this was just an anomaly. I don't know that I buy that, but that's the pushback on this chart, just so you know.
That's interesting.
It is, right? So
there's lots of things that go wrong. The other thing this chart doesn't take into effect is all the private money that's already gone, not measured in the public market. So that's what, when I look at this chart, I go, it really doesn't capture how much money has flown into non-public technology, and also not counting the crypto buzz.
That was a nice segue into PayPal here, Howard.
So it brings you to PayPal, a stock that I own. So I asked you to bring it up, and you can just see, spun off from eBay, how long this company teased investors. And this is something that I love to see, and we'll as we over the weeks talk about what's working. The bigger the base for me, the more excited I get. It takes a lot of patience to just wait out these bases, and this is why you have to build watch lists and spend a lot of time online and set alerts and really let really let technology work for you and alert you. And you can see how many false starts this had, and then boom. You can see back in April, was it April or May?
This breakout here in April.
Yeah, and so, you already got a quick 20% move. This is the type of stock that can just double and double. They have Venmo. The business is already, everybody knows what the business is. All the hate that's associated with PayPal, the brand, is priced in. The market's obviously helping right now, but you can just see that this next generation that lives online in the Venmos of the world and the e-commerce of the world, PayPal's riding that trend. And whether you love them or hate them, institutions have to own non-bank banks to participate in digital commerce. So PayPal is one of those examples.
Listen, the way I learned it, Howard, I can't speak on that behalf. I'll defer to you, obviously. For me, the way I learned it, the bigger the base, the higher in space. This IPO in 2015, it took 2 years of that to digest that supply that was sent out into the market on that initial public offering, which in this case was more of a spin-off than anything else, right, from eBay, if I'm not mistaken, right?
Yes.
And so this was a spin-off from eBay, consolidated for 2 years, and then broke out. So, 2 years of a base, I think, is beautiful. If we had Tesla, we'd pull that up. Very similar sort of base and breakout. And
go to iRobot, our last chart of the day, and we can see the same thing with robots. You can see iRobot.
And huge breakout, exceeded all of my upside expectations. There's no question.
So this is where I blend a little bit of talking to you versus just my own trend following strategy is, iRobot, since if you go back further, you can just see it's been a nothing stock. Great company, started out of MIT. I mean, look at that. So I've been talking about this, 6, 7 years, right? And the problem with stocks is they do what they want to do, right? Like it's a behavioral on top of fundamentals that drives these things. It's not just fundamentals. And you can just see this 44 to 46 price target. How many years? We're talking 10 years of sideways to down to up in this base, and then boom, at the end of 2016, I think.
Sure.
Right when Trump said he's going to bring back jobs to America, wouldn't it make sense that robots, and we can, we'll see this with all robot stocks, that was the final impetus. It's not Trump's fault. I'm saying it's just when these trends happen, it doesn't matter what politics is happening. It doesn't matter what the economy is doing. When institutions need to get hold of robots, as I was writing about for the last year, this is the stock. There's just not enough supply, and they don't care about fundamentals. What I think the average investor thinks is they look at financials and they look at everything else, and they say, well, that's already been consumed by the institutions. iRobot's just another perfect example of big base, great company. The fundamentals don't matter. You're looking at fundamentals that are old. Once these things really get going, you never really understand the growth curve. So yeah, I wouldn't chase iRobot up here, obviously. Myself have been selling in a little bit, but the company's going to have to really screw up for this to fall back into its base. So
what about the Intuitive Surgical?
Same thing. Intuitive Surgical, always been a great company. Obviously, a lot better than iRobot.
I think it's got a date with 1,000, Howard.
Date with 1,000. Again, if you look back at the end of 2016, we're going to bring back jobs. You're not going to turn off the robots. It just turned out to be another great buying opportunity of a great company. Stock's up 50% since November. Those are the kind of gains. Gave back all its base. Touched 600 again, as you see here, as JC's written. This company gave you another great opportunity. So that's why I like to focus on what's working. What else is working? You can see Visa, I think, was next on our thing, JC.
Visa's an absolute beast. So here's Visa, beautiful base throughout 2015. You had the breakout earlier this year, reached our initial target of 90, consolidated for a month or two, and now off we go. New all-time highs today. I think we see 105. I think that'll take us back up to that extension. You know, these markets are all reaching their price objectives. They're all doing it one by one, and that's a sign of a healthy market. When markets are not reaching their targets, that's a sign of deterioration, and we're just not seeing that yet. You know, maybe today was the high. There's absolutely no way to quantify that and to know that. But new all-time highs is not a characteristic of a downtrend.
Yeah, and the way I work at what's working, I'm going to get clipped at the end, but I'm just trying to outline ideas that have working, and I generally think they continue to work. All right.
How about things that are not working?
All right. So here's what's not working. We were promised we were promised drilling and the bring back of oil, and we've got an EPA person that hates anything new, likes dancing, and look, boom, you had the little rally into the election, and look where we are. So explain what we're seeing here.
So this is energy relative to the S&P 500 making what 13-year lows on a relative basis. So there's absolutely no evidence that today was the bottom at all. So don't misconstrue my my open-mindedness for bullishness. It's not. But this former resistance in 2001, 2002, 2003, until we ultimately broke out in 2004 on a relative basis and went out for a huge rally. You know, another perfect example of a beautiful base and a breakout, right? We just showed a couple of those good ones, but eventually that comes to an end, right? But this was a monster move from the breakout in 2004 that peaked in 2008, and it's just
hundreds of percent. That was hundreds of percent in stocks.
Absolutely, yeah. But this has been an absolute disaster ever since, particularly on a relative basis. In 2014 is when we really broke. That's when oil started to crash. So we still have not recovered. So this is still a downtrend. Was this the bottom? And this form of resistance is going to turn into support? That's certainly a possibility, but that's not something I'm betting on right now. We'll just have to wait and see.
Well, what I try and tell people is they think that they're getting diversified by buying bad assets. You get diversified by buying the best assets, and unfortunately, you're diversifying. You're going to always have high beta when the market's going up, but I'd rather own 8 stocks that are working than diversify by owning 2 that aren't working, saying, well, you know, they're going to mean revert. So I tend to look at the world as like, if I'm going to invest, I want all my money working in the proper direction. I don't want to try and catch something else. So energy, massive drag on the world right now. Yes, people need to make a buck in these industries, but money is flowing out.
That's right.
Okay, next up. So that's what is not working. Now let's get to sketch time. This is like crunch time. What needs to work or what doesn't need to work? Let's look at financials to end this, and we'll quickly talk about Europe.
Yeah, so I think you know, we look at financials here. I think this is the big thing. You know, you could just kind of draw that support.
That kind of looks like Trump overlooking Hillary Clinton. That kind of like a lurking shoulders and head looks like how Trump looked when he was looking at Hillary in the.
You know, Howard, I think that. You know, sure, this could potentially break and lead to a bigger disaster. You know, we haven't seen that yet. That hasn't happened. You know, this is today's bar. We're still above support. So, you know, I don't know. You know, I don't want to make, you know, broad interpretations out of incomplete data. So for right now, there's no reason to be short financials.
Yeah, no, I agree. We showed what's working. We showed what isn't working. Energy. This is an area that I wanted to go through that says, you know, it's sketch time. That needs to start working again soon because it has the wind behind it. You have you have the Republicans who want to dereg, who it's a friendly Goldman Sachs. You know, if we pull up Goldman Sachs, just couldn't be a friendlier government to Goldman Sachs. We could say Obama in the end turned out to be friendly, but I'm saying in terms of rhetoric, pull up the Goldman chart, JC. So look at Goldman. I mean, since the election, you know, it's basically since Trump took the White House and brought in all his Goldman friends, the stock's down 15%. So this is, you know, I'm not saying it's not working. I'm long Goldman right now. I'm just saying I'm surprised, and that's what the market does to you sometimes. You said like Goldman should be able to cheat their way to whatever number they want, and the market's saying no, no, no. So what do you see here at Goldman?
You know, so just to bring things back and put things into perspective, you know, this was our upside target, just full disclosure. These 2007 highs, you know, we were super bullish Goldman Sachs down here, right? The time to be buying it was here. Our upside target was the 2007 highs, right? So that target was already hit, right? So now it's just kind of been a wait and see game. So these were the former highs here. So now I'm looking at this resistance from 2015. It acted as support in April, and today it's trying to break. Now, is this legit? Is this a legit breakout, or are we going to see a whipsaw and a rally? I think what we want to see, you asked me, okay, JC, now what are we looking for? If we can hold on to this, recover before the end of the week, and momentum does not get oversold, I think that would be incredibly bullish. If we stay down here for another few days and we start to get oversold, that would mean that there's probably a higher likelihood that we're going to need further consolidation, further decline. I think that would be a negative for sure. We could say the same thing about JP Morgan, right? Boom. Right?
They look the same.
So it looks exactly the same. So it's very similar. So if we can recover without momentum getting oversold, right, down here, then I think that would be good. If momentum starts getting oversold and we hang out longer than just a day down here, I think that's going to be a big problem for financials, and that's not a bullish characteristic for stocks at all.
But we've seen the markets can do well without financials.
Look at broker dealers, same thing. You know, you have that head and shoulder sort of pattern. So whether that resolves, here are regional banks, same thing. You know, so whether that resolves or not, it is really still to be seen.
But the market can do well without financials. So again, to recap, we know what's working tech. We've shown you what's working. It's working at the private level, it's working at the speculative level, and it's working at the global level. And we looked at energy to go, doesn't matter, huff and up, puff, and I try and bring back energy jobs, not happening. And then we looked at an area of real tension, which is the financials. Now, if the financials break, doesn't mean the market will go down. So that's what I wanted to.
Yeah, but it's hard. It's hard. I find it hard to believe that the market is, and this meaning S&P 500, Russell 3000, is going to be going dramatically higher if financials are breaking down. And the measured move to this is substantially lower. So while the market doesn't need financials, the market needs financials. The market doesn't need financials to outperform.
Okay. You
understand? So it's kind of like we don't necessarily need as a leader, but we needed to participate. So you wanted to look at what was happening out overseas, Howard. Here's this is the ACWI, the All Country World Index minus the United States.
Well, I think what makes this important is as the middle of the country or the red over blue is red talks about going insular. Look what's happening. No matter how many walls we build, no matter what the rhetoric has been, something afoot is happening.
So this is the rest of the world compared to the U.S. Is this a legit breakout? I don't know. I think it's too early to see, but definitely much more bullish characteristics than what we've been accustomed to, for sure. At least we're above a 200-day moving average, right? Same thing in emerging markets. You could look at these guys. Here, this is lighten this up a little bit. Right, so this is, we've broken every single downtrend that we've been in. So this is EEM, emerging markets, relative to the S&P 500, similar to what we're seeing in the ACWI, right? Here's Europe. Is this the end of that underperformance from Europe? I would say that the last couple of weeks hasn't been great, but was that the end, or is this more of the beginning? I would say this looks more like the beginning than the end. But we'll certainly see.
Yeah, we don't know if it's going to go sideways. It's not super bullish, but the point is, it's
not a downtrend.
It's not that hard to look at the rest of the world, right? Like, it doesn't mean you have to buy international stocks. There's all these people that say you have to buy international stocks. Apple's an international company. Nike is an international company. But that's what I'm glad you showed that. So, and then let's end with India. I mean, we talk about the chaos. They rejiggered the whole banking system. They took away everybody's cash, and look what's happening. So this is the most interesting market in the sense that it's highly speculative, and we don't know that much about India. And our Americans don't know that much.
It might be highly speculative, but it looks exactly like the German DAX. Here's Germany, you know, peaking in the spring of 2015, bottoming early last year, and breaking out this spring. Here is India, peaking in the spring of 2015, bottoming early last year, and now breaking out this spring. So it might be more speculative. I'm not disagreeing with you, but with respects to, you know, risk appetite out there in the market, they look exactly the same.
Yeah, so we'll end up saying it's easy to be bearish, but there's no real data. The appetite for risk is high right now. That doesn't mean it can't end tomorrow.
Exactly. Today may have been the top of the market, and we'll be watching this video, Howard, you and me, and joking.
No, because there's signs. You know, you've got financials. Energy is weak. Internet. You know.
This is the S&P 500, Howard. Here's the S&P, and here is the new highs that we made last week. And if those new highs can't hold, that's because financials are breaking down as well. And this is going to leave a nice big failed breakout in financials and a bearish momentum divergence. So you want to talk about what we're waiting for? If we're not above 2,400 in the S&P 500.
Yeah, so if we got a big sell-off here in the next week, that would be ugly. That would be
really ugly. So you want to talk about what we're watching? We're watching financials. If they break down, that would mean that this is likely a failed breakout, and that's not going to be bullish. So that's what I'm watching, Howard. So I think that we just really need to keep an open mind.
Yeah, so if you're riding winners, ride them. The market will get you out of this stuff. Charts and old farts. That was fun, JC. We did it quickly around the world, and we'll do this again soon.
This is the first ever charts and old farts that has ever been produced, and you know, I think we talked about some good things.
And the broken clock, right? Twice a day.
The broken clock. It's always 5 o'clock.
All right, buddy. Talk to you tomorrow.
See you later, Howard.